Good morning, everybody. It's the 4th of October. We are Signal Centre Talking Ball. I'm Joe, joined by Jamie and Taff this morning. How are we doing, gents?
Good,
Very well,
man.
thanks,
Good,
Joe.
good.
All good.
Excellent. Glad to hear it. So interesting 24 hours on the market. It's quite a decent turnaround in equities in particular. So we'll get into the latest headlines and run through those right now. So here we go. So yesterday we had the US ISM manufacturing number come out, and we saw a retreat in that number actually. The index retreated to 50.9 for September from 52.8 in August, which was below the consensus forecast of 52.2, and it was the weakest reading since May 2020. New orders dipped back into contraction territory, also recording the weakest reading since May 2020, while there was a marginal advance in production. The employment index also indicated a decline on the month, while the prices index retreated to 51.7 from 52.5, the lowest reading since June 2020. So it feels like at the minute it may be a situation where bad news is good news for the market, as strange as that sounds. But when we're seeing these numbers come in less than expected, it suggests maybe that we are going to see a pivot maybe from the Federal Reserve, and they will indeed come back with some sort of form of quantitative easing or not raise rates as aggressively as expected. So it seems as though bad news is being treated as good news because participants in the market believe there's going to be further support from central banks around the world. The hawkish Fed rhetoric, however, has continued. The New York Fed President Williams stated that the policy was still not restrictive for growth and that there are still more rate hikes ahead. He added that the Fed is calling inflation, but underlying pressures are still strong. We also see the US yields decline. The Treasuries edged higher on Monday in the New York Open, with yields drifting lower. There was a more substantial move after the US ISM data, with the 10-year yield sliding to near 3.6% before consolidating around 3.65%, compared with the 12-year highs we saw last week at 4%. This helped with global equities, decent rebound across the board. We saw some strong gains on Wall Street and a rebound in the Asian markets, although activity was dampened by holidays in Asia. The UK fiscal statement has been brought forward. The Chancellor Kwarteng's conference speech had a little immediate impact, but there were subsequent reports that the fiscal statement will be brought forward from November the 22nd to the from the 23rd to the 22nd of it was expected to be the 22nd of November. It's been brought forward to the 23rd of October. So that's helped underpin sterling sentiment in the short term. Overnight, we had the Royal Reserve Bank of Australia increase interest rates by 25 basis points. That was below the expectations of 50 basis points, taking the overall rate to 2.6%. Governor Lowe stated that the cash rate had already been increased substantially in a short period of time, with the bank slowing rate hikes to assess trends, although he does still expect further increases at a later stage. So that is that for the latest headlines. Let's now take a look at some charts. So we're going to kick off today with FX. And as usual, start off with the dollar index. So this is the daily chart for the dollar index. And as we can see, we are still in retreat mode on this market, following the highs that we posted last week on the 28th of September. The prices continue to move down quite sharply, actually, into newly formed support at 111.31. So we're just a little bit below that at the moment, by around 7 or 8 ticks, down by 0.4%, as you can see there on the watch list so far today. So feels to me like a quite a healthy pullback, really, in the grand scheme of things, given that the move to the upside has been very substantial. And obviously, while the dollar index is retreating, it is giving other assets a bit of breathing room, because, as we know, this has been pretty much the number one asset to own for some time. So that is having an impact on the likes of Euro US dollar, which continues to move to the upside. It still remains within this bearish channel on the daily chart, but a really nice move off of this major support here at 95.95, up by almost 0.5% today as things stand. I've got resistance on my chart at 99.55, which kind of coincides with the upper end of this bearish channel. So for me, I expect gains to be capped somewhere in this region. If we do overcome that 90 955 level, then I'd probably be looking for some sort of test into this zone here, which is at 102.38. So, and in fact, there's probably a level there we can look at as well, which is at just above parity at 100.60. So yeah, decent correction to the upside. Overall trend still remains bearish, as we know, but certainly this move to the upside provides a little bit of welcome relief. Looking at cable, obviously sterling continues to be stabilised by the actions from the Bank of England that we saw last week, and the fact that we're bringing forward the fiscal statement, I think, is helping as well. We've seen prices continue to move to the upside quite aggressively in the short term. We're fast approaching a resistance at 114.10. So I'll be interested to see what sort of reaction we get there. Really, this downtrend kind of lines up with a resistance we've got here on the chart on horizontal basis, which comes in at 117.79. So we may be in for a little bit more upside in the short term, but clearly the overall trend still remain bearish. But again, welcome relief being seen here. There are a couple of currencies that look quite interesting for me on the charts. Just see if I can remember what they were. This was one of them. It was Canadian dollar versus the Swiss franc, fallen into a pretty large area of support here on the daily chart, and seems to have posted a really nice reversal candle yesterday. So that may indicate that we're about to see a decent move to the upside, potentially within a bit of a range. We could be targeting maybe the upper end of this range that we have here, which comes in at 78.60. So that was quite an interesting one. Is there anything else that was standing out for me? I know Euro sterling was being well watched yesterday because it was into a decent support at 87.17. Sadly, it couldn't hold on to that. The sterling strength persisted yesterday, and we actually closed below that level quite impressively. And still remain below it. So that may be off the cards for the time being. Euro yen. What else was looking at? Oh yeah, this was quite interesting. Euro New Zealand dollar, big resistance level here. We saw a big close above it, but we pretty much reversed that entire move yesterday to close below 173.47. So that could indicate that we're about to see a turnaround in this following a really sharp move to the upside. So that could be quite an interesting market to watch as well. I'm going to move on to Bitcoin quickly. And just take a look at this. So overall trend still remains bearish. We're not really seeing too much happen with this. It's still hanging around this kind of 78.6% fib level, still remains within this bearish downtrend. Given that we saw a bit of relief in risk assets yesterday, haven't really seen Bitcoin join the party. Still got this large head and shoulders top pattern that's kind of overshadowing the price action on this for me. It needs to do a little bit more before I can start getting excited about that. But certainly price is quite stable at the minute. And while it's ahead of this 78.6% fib level at 17,800, there is potential for upside in the short term. Indices was really where it was at yesterday. Really nice bounces on a number of those. ASX 200, so we had that rate increase, which was under what was expected actually. But we've seen this major support level here at 64.03 do a really fantastic job. We saw an engulfing candle yesterday, and we've seen substantial follow through to the upside today. So that's really quite encouraging for the short term. Let's see if that can continue. Looking at the European markets, we looked at the Euro Stoxx 50 breaking down through this major support zone at 33.85. We are now trying to recapture that following the bullish outside day candle that was formed yesterday, and looks to be heading higher. Maybe some indications of some sort of ending wedge forming here, and this has been seen on a number of indices actually. Maybe we could argue that there was some sort of wedge here forming, and that we are going to see a corrective move to the upside. If we look at the DAX, interesting one here actually. We broke down through this major support at 12,431. We posted a bullish outside candle yesterday, and we are following through to the upside today by 1.35%. But interestingly, we haven't so far been able to retake this newly formed resistance at 12,431. So already coming up against a stiff test this morning. Let's see if it can overcome that. Sticking with Europe, the FTSE 100 remains pretty impressive actually. This 6822 level, which you've highlighted here with these blue arrows, continues to do a pretty good job to be fair. We've seen 5 attempts at trying to overcome this level. Each one has failed, and we've seen a pretty impressive rebound on each of these occasions previously. And it looks like we may be getting another one here. Impressive turnaround yesterday, follow through on the upside today. We are into a short-term resistance at 69.71. So if we can see a close above that level, then that could be quite interesting. That was also my gun to the head trade yesterday, which we'll come on to in a bit. Looking at the US market, so the Nasdaq looked as though it was giving it up, this major support here at 11,035. We saw a close below it on the 30th of September, but the first trading day of the month in October has been a positive one. We engulfed all of those losses that we posted on Friday to close higher, and we're pushing on yet again today. So you could argue that this support level is doing a pretty good job and could maybe trigger further rallies to the upside. Obviously, still got a lot of work to do to reverse the overall trend. As we can see here, we are still trading in a sequence of lower highs and lower lows. So that is the downtrend confirmed. And therefore, in order to reverse that, really, we need to start taking out this high here from the 14th of September, which is all the way up at 12,880. So a big old move needed from that market before we can start getting too excited about a wider turnaround. So this may just be a case of being a bear market rally, but they can also produce good returns and good opportunities for sharp traders. So keep that in mind. S&P 500, similar situation. We saw this breakdown, looked as though the writing was on the wall for lower prices, but yesterday we saw a very strong reversal here as well. Another bullish outside day and pushing higher. So it looks to be very much on the front foot and plenty of room for a decent move to the upside in the very short term there. And then finally on the Dow, this was the weakest of the US indices, broke down through that major support at 29,672. We are above it as things stand, so there is potential there for a continuation higher in the short term and potential for a nice bear market rally there, which could yield some short-term gains for those that have got the risk appetite to have a go at it. So that's the roundup from me. Taff, can you please take a look at some commodities for us?
All right, let me just share my screen. All right, there you go. So I'm just going to start off with gold. Okay, I'm just going to start off with gold. On the daily, we've been on a recovery path. I think we've had 5 consecutive days of green days, and today seems to be another green day coming. We had a really bullish engulfing yesterday, an outside candle yesterday, we showed a lot of momentum that the buyers are really in this, but we've got a couple of resistances that price is currently facing. Let me just go to the intraday so that we can see that clearly. All right. So the first resistance that I'm looking at is 1712, which is very close, which is where price is at. So we might have a bit of rejection here, and price might come down, or it could just pierce right through. But what I think will really cap price will be the second resistance, which is around the 1734 zone, 1734, 1735 zone. I really think this will hold, because the overall trend that we have, the medium term trend that we have, is pretty bearish on gold. This is hinging on the bullish nature of the dollar index. So I think if the correction is over on the dollar index, then we might get a resumption of the bearish trend on gold. So I'm looking at the first resistance here at 1712. If this holds, then I'm looking for rejection to come down to my first support, which is around 1678, and I've got a second support again, which is 1658. This is pretty much the range that I see gold to be playing at today. Let's go to silver. Silver plays on the same script as gold. We had a really bullish with a bullish engulfing outside day yesterday. A lot of momentum there in that candle. As you can see, it broke right through the Ichimoku cloud, the baseline, the Ichimoku cloud, the SSA and the SSB. Both of them, it shows that there's a lot of momentum in that. And if you look at this, this is almost like a W formation with the neckline right around this 17 1970 level here, which was broken yesterday. So we might get a retest of the zone that we have here, which is 2030. If price comes down here, then it retests this. Then price might go up to this resistance here. Let me go to the intraday so that we can really see clearly what I'm talking about. Okay, here we go. Here we go. So price is currently hovering between this first resistance and first support. The first resistance is the weekly baseline, which is the 2190, which is really the place that I'll be looking to. If I'm to go short on silver, this is the place that I'll be really looking to go short on, because it's quite a good distance from where price is trading now. If it manages to push up here, then I don't see it having enough momentum to go to the second resistance, which is 2250. So I'm looking at 2190 for potential shorts. And if we short it from here, then the first target will obviously be this 2030 here, and then the second will be this zone here, which was respected as a resistance. And will become support at 1970. So this is really the range that I'm seeing price playing at today, if it goes according to script. And then let's go to oil, crude oil. Like the other commodities, again, we had a bullish momentum yesterday. I think for the past 5 or so days, we've been having an uptrend in the commodities. This is due to the correction that we're seeing in the dollar. Right, on crude oil, this outside candle again was quite bullish. The buyers showed quite a lot of impetus that they want to be in the market. But as we can see, we've got this resistance here from the daily baseline here at 87. This can be quite a formidable resistance, and any bulls should be looking out for this to retard their momentum. Let me go to the intraday so that we can really see what I'm talking about. I've just drawn out the levels for you here. So on the intraday, this is that resistance that I talked about, the daily baseline. This is really where I'm looking. If I'm to short oil, this is really the level that I'll be looking to take any shorts on. I'll be looking for signs of retardation of this momentum. So if I get any rejection from this zone, this is 87, then I'll be shorting it, and I'll potentially targeting my first support here, which is 81.17, and then I have a second support here, which is around 79.30 support zone here, and we have a second resistance that's way up here at the 90 level. I don't see price really stretching all the way up to the 90 level today. The level that I'm looking at, my important level today, is this 87 here. I think this is where that we're going to see the action. And here, this support here, this 81.17. I think price will pretty much be playing around in this zone here, depending on what happens to the dollar index. Let me just run through natural gas. Natural gas has been on a bearish momentum, really. We've had let me just move the Ichimoku so that we've had this this head and shoulder, this inverse bearish head and shoulders formation, uh, which uh, which really, I think the measured move target is around the 6,000 six zone here, 6.00 zone, and price is really gravitating towards that. You can see the momentum, we really have it. We broke the snake line here and tested it with this dodgy candle here, and then momentum came back right in again, and price seems to be gravitating towards this 6 level here. So I wouldn't be taking any longs on natural gas, really. Let me just see the intraday levels. The intraday levels here. There we go. Okay. So we've got this is intraday now for us here. This is that the second support is that measured move from the daily, which is the 6.00 level. This is really the ultimate target that we're looking at. But for entries, I'll be looking at an entry at this my first resistance here, which was previous support at 6.78. I'll be looking also at 7.12. I don't see price coming to the second resistance here. But look, it is priced. It can be unpredictable. If it does, then I'm looking to take shots on the second resistance. But my first level to be taking shots on would be a retest of this first resistance, which is the 6.78. If price comes up here, we see rejection. I'm looking to short that. I take some off here at the first support, which is 6.4, which is like a previous low level from yesterday. And then I'll take some off here at the first support, and then my ultimate target will obviously be the 6.00 zone, which is our measured move from for the head and shoulders bearish formation that we see on the daily candle. So I think that's pretty much it on my commodities. Over to you, Joe.
Yeah, lovely, Tav. Really good roundup there. Love the intraday resistance and support levels. I think that's really useful for people watching. So very good, sir. Jamie, over to you. Let's have a look at some stocks.
Thanks, Joe. Yeah, nice one, Tav. Good work there. We're going to start on our biggest gainer, excuse me, biggest gainer and loser of the day. First, looking at this biggest gainer, which is FNGR or Finger Motion. No real news I could find on this, but it looks like a bit of a squeeze. Obviously, only a few days ago it was trading at 67 cents, now up to 6.50. So that actually almost doubled in price yesterday, up 92.88%. Coming into an area of a bit of resistance now, but certainly wouldn't be looking to get in the way of this at the moment. Having a look at APRN. This is Blue Apron Holdings, down 45.33% yesterday, gapped down pretty heavily and sold at the bottom of the day's range. Have a quick look and see if there's any news why this happened. Plunged over 43% after the direct-to-consumer recipe and food delivery company announced plans for an at-the-market offering of up to $15 million of its Class A common shares. Yep, there you go, down 45%. Have a quick look at the S&P heat map for yesterday, and you can see pretty good day overall. A lot of green, as Joe alluded to when we looked at the indices. The big standout for me on the downside was Tesla, and that will be one we certainly come on to and look at in a bit. Down 8.61%, so a really bad day there. But overall, the other big names which dragged the S&P along, Microsoft, Apple, Google, Amazon, all had really strong days. So a pretty nice day overall there. We will start off with Tesla. And this is one we've kept a close eye on for a while. We noted that we ran to this support level here, had that rally that we expected before this pretty aggressive sell-off. Actually, I believe it gapped down about 4% on the open yesterday, and then it sold off more throughout the session. There was some news for this, wasn't there? Reporting Q3 deliveries below expectations, so perhaps the fundamental picture is changing a bit. If we look at the weekly chart for this as well, I believe this is something we've checked out before, but you can see we've got a big head and shoulders top that appears to be forming now. Obviously not confirmed until we do get the break of this neckline we've got here, but looking pretty ominous at this point with the weekly chart not being able to sustain those higher highs, and price looking pretty bad as well on the daily chart. If we do put up the volume, getting those high volume days on the bearish side now, so that perhaps also indicates that change in characteristics there. So one to keep an eye on, certainly not healthy price action to start the week. Check out Amazon next. I know we had a message to have a little look at this. Not too much going on for last week. We've had this pretty aggressive sell-off from the 145 highs we saw back in the middle of August. Since then, like I say, sell-off, and we've had a consolidation for the last week or so. If we drill this down to a 4-hour chart, you can see we've got pretty clearly defined support and resistance levels on this intraday time frame. So we've got this support down at, where are we there? So that's about that 112.30 area. You can see the wicks playing off that there, and opposing you've got the resistance a little bit higher, obviously a little bit higher up, close to 118 there. So looking for a break in either direction. My bias for the moment is still to the downside, but it wouldn't surprise me if we come out to a daily chart if we got a bit of a rally up to this previous resistance level before setting off further. So that could be a potentially nice area to look to get short at about 125 in and around there. Moderna, one we've kept an eye on for the last 6 months pretty closely. We're back at that 78.6% fib retracement. We'll zoom out to a weekly chart and see where that's from. So that's from the lowest price we've ever seen on Moderna. So it's the last real fib retracement in the way of this move lower, and it has held up for the time being. We got pretty nice bullish hammer candle yesterday on a daily chart, but it looks like to me this is soon to be broken. Again, you can, if we bring this out to a weekly chart again, I'm jumping back and forth a bit, but it's a pretty clean head and shoulders again. Actually kind of two right shoulders here. You kind of take it from here or here, something like that, and we're right at that neckline now. So important time for Moderna. It really needs to hold here, or it could fall a fair way lower. Let's check out Nike. I missed this yesterday, but obviously we had this earnings gap down for anyone that's been keeping an eye on it. High volume again. This is a pretty nasty looking picture for Nike now. If we zoom out a little bit on the daily chart, you see those highest volume spike days are all these red sell-offs. So really not looking great there. On a weekly chart, you can see how the picture's changed. If we look back throughout kind of 2017 all the way through to end of 2021, you got those higher highs, and now you can see that's really starting to change now with this aggressive sell-off we've seen. Not really any key support for a while. I mean, there's a fair bit of consolidation around here, so price can certainly get caught up for a little while, but the next real levels are, for me, down at 67 in terms of a weekly support. So a fair way to go if we do get those moves lower. What have we got? We got Apple here. Again, you can see the volumes changing. We noted that over the last couple of weeks with these sell-off days. However, we did have a pretty nice day yesterday with this bullish outside candle. Yeah, so perhaps a bit of a turnaround in the short term, at least for Apple, as we think we might get on the indices, but still would be pretty cautious about this too, because it looks like we're, at least for the time being, done with this nice uptrend we've seen in Apple for a while. At the very best, this is a consolidation. The very worst, if we take out this 129 level, it could be a real turnaround in a bad way for Apple. So certainly one to keep an eye on there. Check out Peloton to finish. It was up 7.79%, so this was one of the better performing assets in the S&P yesterday. And yeah, we noted this head and shoulders continuation. Had that key break. We didn't actually trade this, but this was an idea we hypothesized. This now will turn into a resistance level. Hopefully, not a bad area to potentially try and get short there if we do get that pullback, because we are still in a pretty aggressive downtrend for Peloton, and selling rallies would be what I'd be looking for. So yeah, overall a pretty good day. I think Tesla's the one to really keep an eye on, see how it reacts to that bad fundamental news yesterday, and yeah, we'll call it a day there on the stocks.
Thank you, Jamie, and thank you, Sanadid, for the coins donation. Very kind of you indeed. Hopefully that was beneficial to anybody watching, and if there are any other markets in there that we haven't covered that you'd like us to, then obviously feel free to ask. There was one question on there actually about non-farm payrolls, which are obviously due out this week. Generally a very well watched number in the market, and can have a significant impact on a number of asset classes, particularly those linked to the US dollar. In terms of our expectations of that, in my long experience of following non-farm payrolls going back to when I started my career many years ago, one thing that we all kind of agreed on as brokers, traders, market participants, was that non-farm payroll was a bit of a lottery and always has been, which is why you see quite significant volatility around the number. So in terms of trying to pick a direction, it's pretty much almost impossible. It's you can be right both long and short, sometimes in the same day, because it is that volatile and creates quite a significant move in both directions. In terms of our expectation of the US dollar, on the employment report, in terms of the averages that we've seen over the last 10 non-farm payroll numbers, in the hour after, there's typically been a positive move in the US dollar index of around 0.2%. So that would indicate that that would be quite bearish for gold, because obviously if dollar index is pushing higher, that would be negative for the commodities linked to it. That's going back to Q3 2021. So it's not a hard and fast rule. It can go either way, so just please be careful. I mean, we always used to just laugh and joke that we'd go down the pub on a Friday afternoon because it would just be impossible to trade or go and play golf or do something else rather than get caught up in all that volatility. But if you like that volatility, then fair play to you. But just be careful because it is a really jumpy number indeed. So let's move on to the gun to the head challenge. So this is where the three of us pick trade ideas live on the video in the hope that we can turn it into a profit between now and 9 o'clock this evening when we cut them off. That's UK time. All the trades will be closed out if they hit the stops or the targets. All of the ideas are posted up to our TradingView profile. Although that's not entirely true because yesterday when I was doing this all by myself, I actually forgot to upload it to the TradingView profile. So I do apologize for that. But generally, you'll find our trade ideas on here and you can monitor them throughout the trading session. So we will make sure they will be on there today. In terms of yesterday's trade, just for a quick roundup, I actually went long of the FTSE 100. This was the trade setup. I was looking to buy it, and I did that at a price of 68.49. Managed to hold onto the trade, and at the 9 o'clock close, I believe I was up around 0.75% on that, or
Nice.
0.75R. Sadly, no actual record of that because I didn't upload it to the TradingView profile, but you're going to have to trust me on that one, or maybe watch yesterday's videos for proof on that. So that was a decent trade. It has continued to move to the upside. A little bit of volatility in the last 30 minutes or so. Not sure exactly what's driving that, but I'm sure we'll find out pretty soon. So we need 3 new trades today. Who's got one ready? Jamie, I can see you're raring to go. Do you want to go first?
Yeah. Yeah, sure. So I'm actually having a look at the S&P 500 today. There wasn't too much that jumped out at me when I was flicking through the different charts. I think we've either just broken above key levels or below. But what I'm seeing on the S&P is, firstly, we look at the RSI. It looks pretty overbought to me on an hourly basis. I think this does have scope to move higher, and you can see that I've put a sell idea here. I think it's got scope to move higher, but we are at this pretty key intraday resistance. And with the overbought reading we're seeing, I think there could be a bit of a retracement before we do continue higher. As this is a really quite aggressive trade, it could be stopped out within an hour or maybe even before the hour's over, which is fine because we'll get 3.09 risk reward. So if this level does hold up quite nicely and we do get a retracement before we move higher, we'll pick up 3 times our multiple of risk, which is what we're always trying to do, at least 2R. So we'll have a crack at this. Like I say, pretty tight stop, keeping it just above these previous wicks here, hoping for this level to hold. I tell you what, we'll move it a tiny bit higher, give it a bit more room. There we go, do that. So getting in at current price, which is 37276, 372.7.6. There we go. Take profit going to be at 3677, and our stop loss is at 3745. So that gives us 2.91 risk reward. Like I say, pretty aggressive trade, could be stopped out very quickly, but if it does play out, we'll be making a nice multiple of our risk. So yeah, selling the S&P today.
Okay, best of luck. Taff, have you got one ready?
Yeah, I've got one. Oh, it's running away. So the Euro GBP. I'm looking to play. Okay, I'm looking to play the bearish trend here, the continuation of the bearish trend, and we see price came up and just tested this level here, which was a previous support, became resistance here. So I'm looking to play the continuation, which is really running away. That's gonna be bad for my okay. That's gonna be bad for my risk to reward. Okay, fine. So I'll play the market here. Put my stop just slightly above this resistance here, and then I was looking to target here, but that will make a bad okay. So let me just put my target down there. Fine. So right, so I'm playing the market at 0.8653. I'm shorting the Euro GBP, and then my target is 8498, and then my stop is slightly above at 8718.
Nice one, Taf. Good luck with that.
All right.
Okay, last trade then. I feel a bit sport for choice really out there. There's a few interesting patterns that are starting to emerge on multiple time frames, but the one I've looked at today is Aussie US dollar. So if there is to be a risk rally, then I think this is going to be one of the main beneficiaries because obviously it has significant links to commodities, and we're seeing the dollar index retreat a little bit. If we look at this from a daily perspective, we can see prices fallen quite substantially into a 61.8% Fibonacci retracement level, which comes in at 64.61. Yesterday, we posted a decent bullish engulfing candle, and we are seeing some follow through on the upside for this today. If we break it down to the intraday chart, then it looks to have formed some nice sort of bottom pattern. Not exactly a head and shoulders bottom. It's a little bit of a mess on the right shoulder potentially, or even you could draw one like this, maybe. But either way, it looks like a nice kind of bottoming formation for me. Nice breakout above the 65.30 level. Decent pullback in the last 36 minutes to potentially retest that newly formed support. So I'm going to have a go at buying that today. So the current price is 65.36. The measured move of this bottom pattern, actually take it from the low here, the 28th, to the high there. Projected that higher comes in at 66.98. But what I may actually do is just go by this smaller head and shoulders here to try and make it maybe a little bit more realistic. So I'm going to target there, which is 66.53, and put a stop loss just below the breakout candle at 64.85, giving me a risk reward ratio of 2.25 on Aussie US dollar. So that's my trade of the day. I'll get that posted up to the TradingView profile shortly, and if anybody wants to check them out, please feel free to do so. But just bear in mind, this is a bit of fun that we participate in on a daily basis in the hope that we can see something positive play out between now and 9 o'clock UK time when we close them out. So day ahead, let's have a look at that, shall we, in terms of the economic calendar. So at 3 o'clock, we've got US job openings number. All data points are pretty much active for the Federal Reserve at the minute, and all being considered when it comes to monetary policy. So we'll keep an eye out for that. Then overnight at 2 a.m. UK time, we've got the Reserve Bank of New Zealand's policy decision, following on from the Aussie one that we had overnight, which we saw a lower than expected rate hike from the Aussies, but that seems to have boosted risk appetite this morning. Later in the week, as we know, we've got the US Nonfarm payroll number, which is on Friday, as well as the Canadian employment report at the same time on the same day. So that is that for the day ahead. So the final thing to say, and with great sadness, is that it's actually Jamie's last day with us today before he moves on to a new challenge. It's been great having you on board, Jamie. We've really enjoyed your company and your work ethic and what you've contributed to Signal Centre in the time that you've been here. So it is with great sadness that we say goodbye, but on a positive note, obviously you're going on for a new challenge, and of course we're going to wish you all the very best with it.
Yeah, thanks, Joe. Yeah, I appreciate your kind words. It's been a great almost a year now. I've enjoyed every minute of it, but yeah, I've got onto a new challenge, but I'm sure we'll keep in touch. And as I said last week, I'm still gonna be tuning into Talking Ball. I want to see what the boys are talking about. So yeah, thank you, Joe. Thank you, Taff, as well. It's been great, and everyone that's watched over the last kind of 6 months, writing in questions and just supporting the stream generally, it's been great. So keep doing that, and yeah, I'll probably see you in the chat room in the stream.
Yeah, hopefully so, Jamie. Maybe a couple of guest appearances in the future. Who knows?
Yeah, I'd like that. That'd be good.
Lovely. All right, guys. Well, thank you very much for watching, and we will catch you all tomorrow morning. And until then, have a great day. Goodbye, everyone.
Bye.
Cheers.